People have strange ideas about money. They believe that wealth begins with $1 million. But the truth is, you don't need $1 million to live well. You just need to stop being stupid with half of that amount. $500,000. That's it. 500,000. It's not magic, it's arithmetic. If you can't live a rational life with $500,000, no amount above that will save you. People who can't manage 500,000 usually do the same thing with 5 million, just on a larger scale and with more expensive toys. When I say that all you need is 500,000, I'm not romanticizing poverty. I'm talking about independence, freedom from desperation, freedom from chasing the next shiny thing. Most people never achieve financial peace of mind, not because they earn too little, but because they can't stop wanting more than they have. The hunger never fades. That's why you see surgeons, CEOs, and hedge fund managers making absolute fortunes, yet still miserable, still comparing, still poor in spirit. I've seen it all. In my 90-plus years, I've watched people blow a fortune faster than you can say stock option. They were great at earning, but even better at spending. They called it a lifestyle. I called it idiocy. $500,000 handled correctly can buy you a simple, rational life. One where you don't wake up terrified of bills, markets, or recessions. You don't need a yacht. You need peace. You don't need luxury. You need a margin of safety. You don't need luck. You need discipline. Before you brush this off as just an old man's advice, let me remind you, I made most of my money after I turned 50, and I never chased the next Tesla or crypto miracle. I chased good businesses, fair prices, and patience. Boring things that produced extraordinary results. The average person today earns more, spends faster, and saves less than ever before. Everyone is pretending to be rich, secretly terrified of ending up broke. They post photos of vacations paid for in debt and call it success. They drive leased cars, pay minimums on credit cards, and wonder why financial freedom seems impossible. It's not about income, it's about mindset. Give a fool $1 million and he will soon go broke. Give a disciplined person 500,000 and they will sleep soundly for the rest of their life. Here is the paradox that most cannot accept. Wealth doesn't come from what you earn. It comes from what you don't spend. If you can build a simple, inexpensive life where your expenses are a fraction of your income, you will reach independence faster than people twice as rich as you. I know this isn't exciting. People prefer to hear about secret investments and the next big thing. But if excitement is what you're looking for, go to Vegas. Rationality is boring right up until you realize it is quietly building freedom while everyone else is burning cash for validation. Let me tell you a truth that offends most people. You don't need to own 20 real estate properties, 10 stocks, or a portfolio of startups. You need one clear goal to stop depending on the mercy of luck. $500,000, properly invested and wisely withdrawn, can sustain a modest life indefinitely, especially if you keep your needs simple and your ego small. The number is not sacred. The principle is, you reach a point where money stops being a pursuit and becomes a tool. The problem is that most people never let it become a tool. It remains a drug. They chase more zeros, thinking one extra digit will finally buy happiness. But if you are miserable with 100,000, you will be just as miserable with 10 million. you'll just be complaining from a nicer house. I've met countless people richer than me and dumber than ever. They think success means more income, more publicity, more noise. They forget that the ultimate goal of wealth is freedom from noise. That's why I've always admired people who have learned to live quietly, efficiently, and rationally. They might not be famous, but they are sane. And sanity in finance is worth more than any jackpot. So, when I say all you need is 500,000, what I mean is all you need is clarity. Clarity about what enough is. Clarity about what matters. Clarity that money, past a certain point, brings diminishing returns, but increasing stupidity. I know the internet is full of 20-somethings claiming you need 10 million to retire young. Let me tell you something. Most of them don't even have 10,000. They are selling illusions. They are merchants of greed. The truth is, the best life you can buy is not filled with luxury. It is free from anxiety. And that is achievable much earlier than you think if you stop playing the same losing game as everyone else. 500,000 under good management beats 10 million under bad management every single time. The math is simple, the psychology is not. And if you can't master the psychology, no math will save you. Let's be honest, I didn't pull $500,000 out of thin air. It's not some mystical threshold whispered by financial monks. It's arithmetic. Cold, simple, irrefutable arithmetic. If you invest that 500,000 wisely, not chasing fads, not speculating, but owning productive assets, it can quietly buy you freedom for life. Not extravagance, not toys. Freedom. People forget that financial independence isn't about luxury. It's about control. Control over your time, your choices, and your peace of mind. Let's do the math, since most people never bother. Put 500,000 into a well-diversified portfolio, a mix of productive equities, and maybe some short-term bonds. You can conservatively expect a 4 to 5% annual return after inflation, assuming you don't act like an idiot and panic sell every time CNBC screams about a crash. That's 20,000 to 25,000 a year without touching the principal. Add a modest pension or part-time income, and you're set. You won't live like a rock star, but you will live without fear. And that is true luxury. Not flying on a private jet, but sleeping soundly. If you can't design a comfortable life on 25,000 a year, you don't have a money problem. You have a lifestyle problem, or worse, an ego problem. The truth is, the richest people I've known were also the simplest. They had clarity. They knew the difference between needs and wants. Warren once said, "If you can't be happy with little, you won't be happy with a lot." He's right. I've seen men with 10 houses, 3 wives, and 0 peace of mind. And I've seen teachers retire with a modest nest egg and more peace than any billionaire could buy. Now, most people, upon hearing 500,000, think it's not enough. They immediately imagine inflation, medical bills, college costs, the apocalypse. Their minds spiral into fear because they've built their entire identity around consumption. You don't need more money, you need fewer illusions. The math works, but only if your mind works. 500,000 can generate a perpetual income. It can pay for a modest house, modest pleasures, and most importantly, independence. But the moment you start comparing your life to your neighbor's, that same 500,000 turns into a prison of envy. Comparison kills contentment faster than inflation ever could. Here is the part people hate to hear. If you're still broke at 60, the problem isn't that you didn't earn enough. It's that you ignored the arithmetic for 40 years. You chased passive income life hacks, crypto miracles, and side hustles, when all you needed was consistent saving, rational investing, and patience. But patience isn't thrilling, and excitement sells better. I made my fortune by avoiding stupidity, not by chasing genius. And you can achieve financial independence the exact same way. Spend less than you earn. Invest the surplus rationally. Let compound interest do its quiet work. Repeat for 20 years. You don't need a genius IQ. You need endurance. People underestimate the power of making no mistakes. $500,000 might not sound all that impressive, but in a world obsessed with spending, that amount represents mastery over one's impulses. And it is impulse control, not income, that creates wealth. Imagine if, instead of buying the newest car, you bought productive assets that paid you forever. Imagine if, instead of upgrading your house, you upgraded your patience. That's how you cross the invisible line from dependency to freedom. It's not glamorous, but it is reliable. And reliability beats glamour in the long run. I've seen countless smart investors lose everything chasing an extra % of yield. Meanwhile, the boring, disciplined, frugal, and rational people quietly continued to accumulate capital and eventually became free. They didn't need to be Buffett or Gates. They just needed to not be stupid. Remember, wealth compounds. Stupidity compounds even faster. $500,000. It's not the finish line. It's the point where life becomes voluntary. After that, every dollar adds comfort, not survival. Every investment adds optionality, not anxiety. Every day becomes yours again. That's why I call it the arithmetic of sanity, because it's not about the numbers. It's about peace. The peace that comes from knowing you don't have to tap dance for every paycheck, impress every stranger, or chase every trend. People spend decades searching for financial freedom, when what they really need is psychological freedom. Freedom from envy, greed, and the endless desire for more. Once you understand this, you realize that 500,000 is not a goal. It's a test. A test of whether you can be rational enough to earn enough, disciplined enough to save enough, and wise enough to stop chasing more. The formula is simple. Execution is rare. And if that sounds boring to you, well, so is any enduring truth in life. You might think $500,000 is an attainable goal. After all, many people earn that much in a lifetime. So why do most end up with nothing? It's not about intelligence. It's not about opportunity. It's about behavior. I've watched this pattern for almost a century. People work hard, make decent money, and somehow die broke. They don't fail because the system is unfair. They fail because their habits are. They spend first and save later, if they save at all. They confuse comfort with success, and they mistake motion for progress. I've said it before. The world is not driven by greed. It is driven by envy. And envy is the most expensive habit you can have. People don't want a good life. They want a better life than their neighbors. And that's a no-win game. You can't beat envy. You can only outgrow it. Every generation falls into the same trap. They buy houses that are too big, cars that are too new, and clothes that are too expensive. all to impress people who are too busy scrolling their feeds to even notice. It's insanity, perfectly disguised as a normal life. Then they wonder why retirement feels impossible. Inflation didn't steal their future. Their own impatience did. They wanted everything at once. The house, the vacations, the gadgets, the illusion of wealth without the discipline to sustain it. You cannot build wealth if you don't know how to delay gratification. And you cannot delay gratification if you are addicted to showing off. That's why I've always said, avoid stupidity before you seek genius, because genius won't save you from stupid behavior. Let me tell you something. I learned this the hard way. The biggest risk to your wealth is not the stock market, nor recessions, nor taxes. It's you, your impulses, your need for attention, your fear of missing out, your inability to sit still while others brag about getting rich quick. People act like financial discipline is a punishment. It's not. It's liberation. If you can resist buying things you don't need, you are already richer than most millionaires drowning in debt. Let's talk numbers again, because numbers don't lie. Suppose you earn $60,000 a year for 30 years. That's $1.8 million earned in a lifetime. Yet, most people retire completely broke. Where did it all go? It didn't disappear. It went to Starbucks, car leases, impulse buys, and vacations they couldn't afford. It went into trying to look successful instead of actually being successful. $500,000 is within reach for almost anyone who spends a couple of decades living below their means. But it requires one thing. Modern society hates restraint. Everyone wants freedom, but no one wants discipline. They are the same thing, just viewed from different ends of time. Discipline now creates freedom later. Lack of discipline now guarantees slavery later, to bills, to debt, to stress. Most people don't have money problems. They have priority problems. They treat luxuries as necessities, and necessities as annoying inconveniences. I once knew a man who made over $1 million a year. He was always broke. He called it cash flow problems. I called it high-income stupidity. He thought wealth came from earning more. I told him wealth comes from needing less. He laughed. 10 years later, he wasn't laughing. It's a strange paradox. The higher your income, the easier it is to stay broke, because money amplifies habits. Good habits multiply slightly. Bad habits explode. You see, accumulating $500,000 doesn't require genius. It requires consistency. Consistency. So dull, so boring, so unglamorous that most people can't stand it. That's the real problem. Boredom. People can't handle it. They need drama. They need excitement. They need the illusion that they are doing something big. So they trade, speculate, buy garbage, diversify into 20 ideas they don't understand, and call it investing. Meanwhile, the boring guy living in a modest house, buying index funds, ignoring market noise, quietly becomes financially free. He's not a genius. He's just not stupid. Want to know why most people never reach $500,000? Because they want it fast. They want a shortcut, a secret, a miracle. They don't want discipline, and life doesn't reward shortcuts. It rewards systems. It rewards people capable of enduring monotony. The truth is, wealth isn't built in massive leaps. It is built one paycheck, one choice, one rational decision at a time over the course of years. Most people suffer financial ruin not because they are unlucky. They fail because they cannot bear the boredom of constantly doing the right things. It's not that 500,000 is impossible. It's just that most people refuse to live in a way that makes it inevitable. And that is a tragedy. Not poverty, but preventable stupidity. 500,000 is attainable for the rational. But for the impulsive, it might as well be 1 billion. Because the hardest part of wealth is not earning it, but keeping your head when the whole world is losing theirs. Most people think they are investors. They aren't. They are gamblers in disguise. They aren't building wealth. They are placing bets on it. And when it doesn't show up fast enough, they move to the next table, hoping luck will save them from their own impatience. That's not investing. That's financial roulette. I've watched this behavior for decades. In markets, in real estate, even in business. People chase returns instead of principles. They aren't trying to get rich slowly. They are trying to get rich immediately. And that is the only difference between a builder and a gambler. It is the line between independence and disaster. A builder understands the game. He knows that compound interest takes time, years of boredom followed by sudden astonishment. He understands that consistency is more powerful than genius. He measures progress by stability, not excitement. A gambler can't stand still. He thinks he's smarter than the market. He wants results now, applause now, freedom now, and ends up getting regret later. The irony is that the gambler often works harder. He reads every headline, checks every stock price, listens to every rumor. The builder, on the other hand, spends more time thinking than reacting. He makes fewer moves, but they are better ones. The gambler is always anxious. The builder sleeps soundly. When I started, I didn't have much, but I had discipline. And discipline compounds faster than capital. I didn't buy what was hot. I bought what made sense. I didn't ask what would go up tomorrow. I asked what would survive the next 20 years. That's what a builder does. He builds something that lasts. You see, a gambler needs constant stimulation. He wants his money to be doing something. He can't stand stillness. But stillness is where compound interest works best. Money grows like a tree, not like a firework. It doesn't perform for you every day. It just stands quietly, invisibly, until one day it surprises you. But gamblers can't wait for that. They prune the tree too early. They dig it up every month to check the roots, and then wonder why nothing grows. Builders plant, protect, and wait. Gamblers panic, chase, and repeat. It's not the market that ruins them. It's their behavior. Every crash, every bubble, every stupid move by the Fed. The gambler is the one funding it. Take crypto, meme stocks, housing bubbles. The names change, but the stupidity remains the same. A builder doesn't need to predict the future. He just needs to avoid ruin. Because avoiding ruin is in itself a compounding strategy. When Warren and I were building Berkshire, we didn't act like traders. We acted like architects. Every dollar was a brick. Every decision was structural. We wanted something that would stand tall in recessions, not collapse under the weight of enthusiasm. Gamblers laughed at us for being too cautious. They said we were missing out on opportunities. It's funny how most of them disappeared by the next downturn. Builders understand one eternal rule. You don't need to be a genius. You just need to stay in the game. Gamblers want to double up fast, but forget the flip side of doubling. You can also get cut in half just as fast. I've seen more people go broke chasing shortcuts than go broke from bad luck. Bad luck hurts once. Stupidity is recurring. A builder plays the long game because he understands scale. And one good decision, held for decades, beats 1,000 feverish trades. That's why I often say it shouldn't be easy. Anyone who thinks it's easy is a fool. Building wealth requires rational patience, not excitement, not luck, not IQ, but patience. That is the trait gamblers lack the most. You'll notice something else about builders. They are quiet. They don't brag. They don't tweet their every move. They are too busy doing the work that gamblers only pretend to do. Gamblers talk about potential. Builders talk about process. One chases thrills, the other creates value. That's why most gamblers end up disappointed. They don't realize that compound interest isn't an event, it's a lifestyle. You don't get rich overnight. You become someone who doesn't lose money easily. That's the difference in mindset. The builder's goal isn't just to make money, it's to never be desperate again. And that is exactly what 500,000 symbolizes. Not a pile of cash, but proof that you've built something solid, something that can weather the storms. Gamblers don't survive storms. Builders do. If you remember one thing, let it be this. The game of wealth isn't about speed, it's about survival. And survival requires design, not luck. So think like a builder. Play for decades, not for dopamine. And when the gamblers fade away, you'll still be standing. That is the quiet reward of rational patience. You get to live in peace while everyone else keeps losing their minds. If I woke up tomorrow with only $500,000 to my name, I wouldn't panic. I would smile, because that is more than enough if you think clearly. The problem isn't the money, it's the mindset. Make sure I never lose this? That's the only question that matters. How do I make sure I never lose this? That's the difference between investors and dreamers. Dreamers focus on growth. Investors focus on survival. So, if I had $500,000 today, here is exactly what I would do. First, I would divide it into 3 buckets: safety, sanity, and growth. Safety keeps you alive. Sanity keeps you calm. Growth moves you forward. Safety is my fortress. I would put maybe $100,000 into short-term treasury bills or high-quality bonds, something that sleeps as soundly as I do. It's not an investment. It's insurance against stupidity. You see, when you have a safety cushion, you stop making desperate decisions. You can think clearly. You can be patient. And patience is what compounds wealth. Most people skip this step. They keep all their money in risk assets because cash is trash. Well, panic is trash too. And panic destroys far more wealth than inflation ever could. Sanity is the part most ignore. I would keep another $100,000 in pure liquidity. Cash or near cash, not to spend, but to wait. Waiting is underrated. The ability to sit perfectly still while the world is screaming is priceless. When opportunities arise, and they always do, you will have dry powder while everyone else is begging for a bailout. Liquidity is freedom. It buys you time, and time buys you everything else. Growth. This is where discipline turns into compound interest. The remaining $300,000 goes into productive assets, into real businesses, not speculative toys. If I were young again, I would buy stakes in simple, boring companies. Ones that sell things people will still be buying 20 years from now. Soap, food, medicine, energy, and information. things that don't go out of style and don't rely on the genius of management. Index funds would do the job perfectly. Low costs, broad reach, no drama. The less you touch them, the more they grow. Every month, I would add to them slowly, quietly, relentlessly. Not chasing outsized returns, not trying to time the dips, just exercising automatic mechanical discipline. You cannot control the markets, but you can control your behavior. And behavior beats forecasting every single time. Now people ask, what about real estate? It's fine if it's simple, understandable, and generates positive cash flow, not some speculative Airbnb nonsense in a tourist town. If you wouldn't own it without leverage, you shouldn't own it with leverage. Debt isn't evil. What is evil is stupidity combined with debt. And most people mix the two. If your 500,000 is leveraged to look like 5 million, you are one downturn away from zero. Ask anyone who thought housing only goes up. They learned the hard way that trees don't grow to the sky. Therefore, I would rather own less, but own it outright. Freedom doesn't come from having more. It comes from owing nothing. That's the real point. 500,000 won't buy you luxury. It buys you autonomy. And autonomy is wealth. When you have enough means to say no, you are rich. When your survival doesn't depend on the next paycheck, you are free. When you stop chasing what everyone else worships, you are wise. I would also make one final investment, not in dollars, but in time. I would invest at least 10 hours a week in improving my judgment. Because if your judgment is sound, you can lose your money and rebuild everything. If your judgment is poor, no amount of money will save you. You cannot outsource thinking, and you cannot compound stupidity. That's why I never chased hot tips. I chased understanding. When you understand what you own, you stop being afraid of every market headline. So, if I had 500,000 today, I would make it indestructible. Simple, efficient, rational, and immune to stupidity, including my own. Because the goal isn't to get rich, it's to stay rational. Rational people always become rich enough over time. Remember, 500,000 managed with calm intelligence beats 5 million managed with fear. Every time. People love to overcomplicate things. They think complexity equals intelligence. It doesn't. In fact, complexity is often just a disguise for confusion. The smartest people I've met built their fortunes in the simplest ways, understanding exactly what they were doing and staying within their circle of competence. The dumbest people I've met tried to act like geniuses in fields they barely understood. Let me tell you something most people won't admit. You don't need a PhD in finance to get rich. You need humility, you need patience, you need to stop doing stupid things. That's it. But people can't resist sophistication. They see a simple plan. Save, invest, wait. And they immediately get bored. So they add a strategy. They pile on complexity until it collapses under its own weight. It's almost comical. People read a few blog posts and think they've outsmarted a century of arithmetic. They call it advanced investing. I call it smart stupidity. I've seen fortunes lost in the name of sophistication. Hedge funds that blew up. Trendy products nobody understood. People betting on derivatives of derivatives of derivatives. And all because they thought being simple meant being unsophisticated. The irony is that simplicity is the ultimate sophistication. It takes real understanding to filter out the nonsense. It's easy to sound smart, it's hard to stay clear. That's why Warren and I have always preferred things that could be explained in a single paragraph. If it takes 20 slides and buzzwords to justify an investment, it's probably garbage. Let me be clear. If you can't explain your investment to a 12-year-old, you don't understand it well enough to own it. I've watched people buy structured notes, leveraged ETFs, AI quant portfolios, and all with the same ending: confusion, disappointment, and loss. Meanwhile, the boring investor, who simply bought great businesses and sat still, quietly compounded his way to freedom. That's the funny thing about wealth. It rewards the predictable, not the flashy. Simplicity compounds, complexity collapses. It's the same in life. People ruin simple things by overthinking them. They chase novelty instead of clarity, excitement instead of logic, and the market ruthlessly punishes them for it. I've said before that the world is not driven by greed. It's driven by envy. Well, complexity is envy in disguise. It's people saying, I want to feel smarter than the next guy. And envy is expensive. If you want to get rich, stop trying to look smart. Start trying to be clear. Here is what simplicity looks like in practice. Spend less than you earn. Invest the difference in productive assets. Ignore the noise. Repeat. It's boring. It's mechanical. It's efficient. The sophisticated investor can't stand boredom. He wants movement. He wants dopamine. So he ends up paying people to make him feel busy. That's Wall Street's business model. Selling adrenaline disguised as insight. The more you trade, the richer they get. They sell confusion. You pay for entertainment. Meanwhile, the quiet investor does nothing and becomes rich enough to never worry again. People ask me, Charlie, how do I know if my strategy is simple enough? I tell them, if it requires constant attention, it's too complex. Your money should work harder than you do. If you have to babysit it, that's not investing. That's gambling with paperwork. Let me give you a rule worth remembering. The more moving parts, the more ways to fail. This is true for airplanes, marriages, and portfolios. So engineer your financial life like a sturdy bridge. Fewer moving parts, a wider margin of safety, built to last. If it's exciting, you are probably doing it wrong. At Berkshire, we used to joke that we got rich by avoiding stupid mistakes. That wasn't humility, that was math. Create durability. And it is durability. Create durability. And it is durability, not genius, that preserves your wealth. Look, I know simplicity doesn't sell courses and doesn't generate clicks, but it builds fortunes. The kind of quietly compounding fortune that lasts long after the noise fades. I've seen sophisticated investors make a fortune and lose it all on one bad bet. But I've never seen a rational, simple investor go broke patiently owning good businesses. You don't need a secret formula. You need fewer moving parts and better habits. The rest will take care of itself. So, if you want to protect your $500,000 or any other amount, keep it simple. Understand what you own. Ignore what doesn't matter. And above all, don't confuse activity with progress. In finance, the simplest strategy is often the smartest, and the smartest usually looks boring. If you can learn to love that boredom, you've already won the game. People spend their whole lives chasing more money, more status, more everything. And almost no one stops to ask, more than what? It is the disease of modern life, an endless pursuit with no definition. no finish line, no clarity. Just an ever-growing appetite. You see, poverty doesn't ruin people. Insatiability does. And I've seen more lives destroyed by the inability to stop than by any market crash. Let's be honest. The world rewards greed in the short term. The ambitious rise fast, the loud grab attention, and the humble are ignored. But in the long term, it is the calm, the disciplined, and the self-sufficient who actually keep their wealth and their sanity. I've met plenty of people who won the money game but lost the game of life. They were asset-rich, but bankrupt in peace of mind. They didn't own their wealth. Their wealth owned them. They couldn't sleep without checking the market. They couldn't enjoy a meal without thinking about opportunity costs. They couldn't stop running, even when they had already won. That's not success. That's slavery in a more expensive suit. I once said, to get what you want, you have to deserve what you want. And deserving wealth doesn't mean accumulating it endlessly. It means knowing when to stop. When enough is truly enough. The problem is that enough has become a foreign word. People chase bigger houses, flashier cars, riskier investments. Each step up brings pleasure for a moment. Then the high fades, and they need a new fix. That is how middle-class comfort turns into upper-class misery. They trade contentment for stimulation and call it progress. The truth is, the cost of chasing more isn't just financial, it's mental. Every new obligation, every upgrade, every ego-driven purchase adds another link to your invisible chain. Soon, you aren't living for freedom. You are working to maintain appearances. I once knew a man, smart, talented, but restless. He had made more money than he would ever need. But he couldn't stop. He kept buying companies, chasing deals, expanding empires. When I asked him why, he replied, "I'm terrified of standing still." It's a trap. People confuse motion with meaning. They are terrified of silence because silence forces you to face yourself. The irony is that wealth gives you the ability to slow down, but most people use it to accelerate their own misery. You can see it everywhere. They build houses so big they need a staff to manage them. They buy cars they don't drive, clothes they don't wear, and investments they don't understand. They think they are accumulating power. In reality, they are multiplying dependencies. When you chase more, you lose leverage over your own life. The more you own, the more things own you. I have always admired people who have mastered the art of enough. They don't stop growing, they stop needing. And that is an entirely different kind of wealth. Clarity is the rarest currency. And the clarity is the rarest currency in the world. Want to know why most investors make stupid decisions? Because they can't stop reaching for more. They see a 7% return and think, why not 10? They chase, overextend themselves, and fall right off the cliff. It isn't the market that destroys them. It's greed dressed up in an ambition suit. $500,000, used wisely, is enough to build a calm, rational, meaningful life. But if you let greed take the wheel, you'll turn that same $500,000 into a stress factory. You'll be checking prices daily. You'll be constantly comparing. You will never feel secure because enough will constantly be pushed further away. The world will always offer you something newer, shinier, riskier. Your job is to ignore it. The ability to say no is the most profitable skill you will ever develop. People think getting rich requires genius. It doesn't. It requires restraint. restraint from chasing every opportunity, every trend, every illusion of more. That's why most people stay broke, not because they don't make money, but because they can't stop needing it. So here is the paradox. The faster you chase more, the longer you stay trapped in scarcity. The moment you decide that it is enough, you begin to experience true wealth, the kind that cannot be measured in numbers. Wealth isn't having everything, it's being free from the need for everything. If you can grasp that, you will have something most billionaires don't. Peace. And peace, my friend, is the ultimate dividend. Freedom is the most misunderstood word in finance. Everyone says they want it, but almost no one knows what it actually means. To most people, freedom means doing whatever they want. To me, it means not having to do what you don't want. That's the difference. True freedom isn't in private jets, exotic vacations, or fantasies of passive income. It is the quiet confidence that comes from knowing you can say no to bad jobs, bad deals, bad people, and bad impulses. It is the ability to walk away. That is wealth. That is freedom. When I had nothing, I learned discipline. When I had everything, I learned restraint. And I can tell you from experience, restraint feels much better. Freedom isn't about adding layers of luxury. It's about peeling away layers of dependency. Dependency on a paycheck, dependency on public opinion, dependency on the next hit of dopamine to convince you that you're doing well. A person with 500,000 and peace of mind is freer than a billionaire terrified of losing his status. I've met both types. The second type is far more common. They call themselves financially free, but they can't stop checking the markets, can't stop competing, can't stop needing more validation. That's not freedom. That's just a high-income prison. Freedom is invisible from the outside. You can't post it on social media. You can't buy it on credit. It is measured internally by calm mornings, clear decisions, and quiet nights. Most people will never find this kind of freedom because they confuse excitement with happiness. They think freedom means escaping work, struggle, and boredom. But boredom is a feature, not a bug. It means you have stopped living at the mercy of chaos. Want to know what true freedom looks like? It is the power to live on your own terms, at your own pace, without asking for permission. And it is accessible to anyone, but only if you redefine success. The world tells you success is measured by how much you have. I say it is measured by how much you can walk away from without losing your peace. Freedom isn't free. It costs you your illusions. It costs you the high of proving you are just as good as anyone else. It costs you the fake pride that comes from looking rich while being terrified inside. It's a small price to pay for sovereignty. Here is the strange part. When you no longer have anything to prove, your decisions instantly improve. You stop buying junk. You stop chasing trends. You start living rationally. It is a mindset that most people never reach because it requires humility. You have to admit that all this time you were driven by fear, envy, or insecurity. But once you do, your relationship with money transforms. Money stops being a master and becomes a tool, a simpler tool for creating a simpler life. A life with a margin of safety. A life where you own your time, the most valuable asset there is. I've been saying this for years. The best thing a human being can do is help another human being know more. and that includes helping them understand what freedom is. In reality, freedom doesn't come from the number in your bank account. It comes from understanding the difference between enough and too much, between living well and living large, between security and showing off. The moment you stop needing more, you have already crossed the finish line. The market might crash, politicians might scream, currencies might devalue, but your peace remains untouched. That is true wealth. It isn't exciting, but it is enduring. And endurance is all that matters in the end. So, when I say all you need is 500,000, I'm not talking about money. I'm talking about clarity. Because once you have clarity, freedom follows naturally, and you stop living like everyone else, busy, blind, and poor in spirit. You don't need endless riches. You just need enough to stop being afraid. The rest is freedom, peace, the quiet satisfaction that comes from what you no longer crave. The proof of freedom isn't having it all. It's having no need to prove anything. Getting rich is easy. You might get lucky. People win lotteries, sell companies, or catch the right wave of speculation every decade. But staying rich is an entirely different game. It requires character. Wealth tests people much harder than poverty, because once you have money, the world starts whispering in your ear. Spend it. Show it off. Prove it. This is where most people break. They think wealth is a destination. It's not. It is a constant state of vigilance against stupidity, especially your own. The first rule of keeping wealth is the same as the first rule of flying an airplane. Don't crash. I've seen fortunes disappear faster than they were created. All it takes is a few bad assumptions wrapped in arrogance. A little leverage here, a little overconfidence there, and suddenly the house collapses. That's why Warren and I built Berkshire Hathaway exactly the way we did. Slowly, reliably, boringly. We never chased thrills. We chased endurance. And endurance comes with humility. Humility is the hidden trait of every lasting fortune. It's not glamorous, but it is the difference between compounding over decades and losing everything in a single year. Humility reminds you that luck played a part, that the markets aren't obligated to hand you another win, that trees don't grow to the sky, and that success can make you stupid if you start believing your own headlines. The moment you think you are immune to loss, you are already on your way to it. You cannot compound arrogance, only discipline compounds. When you are rich, you can afford almost anything except carelessness. That's the irony of wealth. The more you have, the less you can afford to be reckless. Because when poor people make mistakes, they start over. When rich people make mistakes, they make the headlines. I've seen heirs destroy a legacy in a single generation because they confused an inheritance with intelligence. They thought money transmitted wisdom along with it. It doesn't. Wisdom must be earned, usually through pain. So, if you are lucky enough to reach financial independence, treat it as a fragile ecosystem. Protect it. Nourish it. Don't feed it garbage. Avoid stupidity, debt, ego, speculation, and greed. You don't need genius to stay rich. You just need to avoid stupidity long enough. Let me tell you something else people overlook. Wealth disappears when habits disappear. The same frugality, curiosity, and restraint that built it must continue to guard it. The day you relax those habits, you start the countdown to ruin. I have always believed that comfort is the enemy of discipline. The moment you think you've made it, you stop doing what got you there. And that's when the decay begins. You stop reading, you stop learning, you start outsourcing your thinking to other people, consultants, advisors, experts, and they will gladly take your money while pretending to protect it. Nobody guards your capital the way you do, because nobody else paid the price to earn it. I remember in the 1970s, when inflation was eating people alive, some investors panicked. They sold good businesses because the headlines scared them. We didn't flinch, we held on. Not because we were brave, but because we were prepared. Preparation is underrated. It is boring, monotonous, and unglamorous. But it keeps you from panicking when everyone else is losing their minds. That's what staying rich means. You stay rational while others go crazy. It's not about predicting a recession or picking winners. It's about surviving amidst the stupidity. I've seen more fortunes perish from hubris than from bad luck. The market eventually humbles everyone, but some people make it easier by walking in with an ego. The trick is simple. Never confuse being early with being wrong, or being rich with being smart. Every boom hides a future crash. Every profit hides a test of your discipline. And every fortune hides the temptation to lose it. You stay rich by remembering how fragile success really is. You remember how hard it was to build, and you refuse to forget that pain. Because the moment you forget the pain of being broke, you start acting as if it could never happen again. And then it does. So yes, getting rich is easy. Staying rich is rare. It requires humility in victory, discipline in abundance, and clarity in the noise. If you can hold on to that, 500,000 will turn into a life of peace. But if you can't, even 5 million won't save you. After all the numbers, all the lessons, all the decades of watching the rise and fall of men, here is what I have learned. Money solves money problems, and nothing else. It can buy you comfort, but not character. Security, but not sanity. Pleasure, but not purpose. People think that once they hit a certain number, everything else will fall into place. But all money really does is amplify who you already are. If you are disciplined, it buys you peace. If you are foolish, it buys you a faster destruction. I have seen both. The richest people in the world often live the poorest emotional lives. They collect things instead of wisdom. They measure success by square footage and followers. But inside, they are restless, haunted by the same question they've been running from their entire lives. Is this it? Yes. Right now, this is it. And if you cannot find contentment here, no number will fill the hole. That is why I've always said that wealth only makes sense when it buys you the ability to live rationally, to avoid stupidity, rather than to show off your intelligence. True wealth is invisible. You don't see it on a balance sheet. You see it in how someone behaves when the world goes crazy. You see it in the calm, in the restraint, in the ability to say, "No, thank you," while everyone else is screaming, "To the moon!" The irony of success is that it tempts you to abandon the very things that created it. Simplicity, discipline, patience. Those are the foundations. Lose them, and you lose everything that mattered. You can inherit money, but you cannot inherit temperament. And temperament is what keeps wealth alive. I have lived long enough to know that most people don't need more advice. They need fewer delusions. They don't need another strategy. They need to stop seeking approval from people who don't matter. The older I got, the clearer this became. Money can buy you almost anything except wisdom. That part you have to earn. Wisdom costs time, mistakes, reflection, and usually a few scars. But it is the only currency that never devalues. That is what this whole talk about $500,000 was really about, not the number. $500,000, managed wisely, represents a mindset, a quiet, rational independence, a rejection of the madness around you. It says, I don't have to play your game, and that is priceless. You cannot buy freedom. You cannot buy self-respect. You can only live in a way that earns them. And the sooner you understand that, the sooner money stops being a master and becomes just another tool. At my age, I don't romanticize wealth. I respect it. I respect what it can do and what it can destroy if mishandled. I've buried friends who were rich in every sense except wisdom. They won all the financial battles and lost the war for peace of mind. So, if you remember one thing, remember this. The true purpose of money is to make you worry less, not want more. If your wealth brings anxiety, you don't own the money. It owns you. $500,000, used rationally, can buy you a decade of peace. 5 million, used foolishly, can buy you a lifetime of chaos. The math matters less than the mindset. The right mindset is boring, unemotional, deliberate, and incredibly effective. That is how I lived, that is how I invested, and that is how I think any person with common sense should live. When you finally see money for what it is, a tool, not a trophy, you stop chasing, you stop comparing, you stop fearing. And that, my friend, is the moment you actually become rich. Because the richest person isn't the one who has the most. It is the one who needs the least. This truth never changes. Not in 1950, not in 2025. Never. So, whether you reach that point through 500,000 or 5 million, remember to keep it simple, keep it rational, and keep it yours. Because money cannot buy wisdom, but wisdom can protect your money forever.